game to get it on. More than 5 O's in your bank to get it on. Roll up like that thing to get it on. Plank to fit it on. Came to get it on. Hold up, you wanna work that, twerk that. Let me in, let me hurt that, murk that. Till you gotta hurt back.
Ladies and gentlemen, we are now on day 3 of the Tax-Free Wealth Challenge. As always, please welcome your host, Karlton Dennis.
Welcome to day 3 of the Tax-Free Wealth Challenge, everybody. Oh, I'm so excited to be here with all of you guys. Can you believe that we are already 3 days into our 5-day event? And by the way, yes, you are learning advanced tax strategy. How many of you guys felt like yesterday's training was eye-opening for you? And you felt like, you know what? I might not be structured correctly. Be honest with me. Let me know in the chat box. What did you guys think? I was super excited to be able to teach that to you guys because it took me years to really understand advanced LLC structuring and advanced entity layering. And for many of you guys, I know that you are starting to understand how you can take advantage of the tax code section 162A, by having your entity structured correctly. It's not just about being a business owner, it's about having the right business entity set up. Am I right? How many of you guys feel like it's time for you to get the right business entity set up? You may not have had the right one set up before in the past, but you're trying to make the right changes this year in 2025. Is that you? Totally okay, and I'm here with you guys. Now, I want to make sure that you guys locked in on what we learned yesterday. So remind me of what that acronym was, COPE. What did that stand for? Let me know, VIPs inside of the chat box. What did that acronym stand for? COPE. We talked about it yesterday. Okay. Stands for Charging Order Protection Entity. It's funny how if you go to my YouTube channel, you won't see anywhere on YouTube about charging order protection entities, do you, on my YouTube channel? You won't see that there. If you go to Mark Kohler's YouTube channel, you won't see Mark Kohler talking about charging order protection entities. If you go to Tom Wheelwright's channel, you won't see Tom Wheelwright talking about charging order protection entities. If you go to Amanda Hans, no one is talking about charging order protection entities on YouTube. And you know why, guys? It's because most CPAs and tax professionals understand that people jump on this information and start setting things up without truly understanding what they are setting up. How many of you guys truly felt like yesterday, Karlton, I understand the purpose of the charging order protection entity. I get why I would utilize Wyoming as a parent company to hold a holding company now. How many of you guys fully understand that? Okay. How many of you guys also understand why you would have a holding company in the state in which you hold the actual rental property? Put yes in the chat box if you understand that. Put no in the chat box if you don't. Part of the reason why some of us in the tax community don't share some of this information is because to fully make sure somebody understands this, it might take 45 minutes to an hour, and YouTube really only likes about 15 to 20-minute videos. And somebody watching a video on YouTube about a charging order protection entity without understanding the differences between a holding company, a management company, knowing the differences between an active business versus a passive business, separating their operations versus their assets on a T formation document, they're just going to go rush off and set up something and get pissed off at the person who told them about it. So I want to make sure that you guys have access to the right information, because I believe part of the reason why people act in the top 1%, they're able to act on things, is because they have access to the right tools and information. Now, outside of understanding what a charging order protection entity was, how many of you guys felt like you're a little bit exposed with your single member LLC? Put a yes in the chat box if you do. Put no in the chat box if you don't. How many of you guys felt a little bit exposed yesterday? Like, geez, Karlton, I've been filing my tax return as a sole proprietorship or a single member LLC. I had no idea all this information was being reported inside of my individual tax returns. I had no idea that the IRS had so much optics into everything that I'm writing off. It's interesting, right? And then when you start to think about who really gets penalized the most, it's the middle class, right? It's the middle class. Those that are really trying to get out of the rat race. That's really the ones that get penalized the most. The ones that set up the basic single member LLC, right? Have the basic Schedule C inside of their tax returns, And they're the ones that get the basic routine audits every single year because you're easy, low hanging fruit for the IRS to pick at. That's what you are. But somebody who's structured with a single member LLC that flows over into a partnership LLC that's based in Wyoming, that doesn't have the manager's members' names underneath it, that doesn't report any expenses like a home office on the document, they're definitely a little bit more challenging to audit, aren't they? They're a little bit more challenging to audit. So the question here is, do you want to be an easy audit target, or do you want to be a challenging audit target? Choice is yours. Put it in the chat box. Now, how many of you guys took your homework seriously yesterday? And you got it done. You said, Karlton, I'm going to go ahead and focus on my T formation. I'm going to separate my operations from my assets. I'm going to get this done. Put done in the chat box if you got your homework done. Because some of you guys took me seriously when we were talking about the T formation, and some of you guys weren't taking me that seriously. So I want to show you guys an example of a T formation built out here. This is someone that has a consulting S corporation. In what state is this parent company in, guys? What state does it say right there? What state is this parent company in? It's in Wyoming, right? We just talked about this yesterday. We talked about this yesterday. You can have a charging order protection entity both on the operation side as well as the asset side. We talked about this yesterday. So yes, there's an S corporation. Now, this S corporation owns 100% of this rental flipping LLC. They live in Nevada. So guess where that LLC is set up? Let me know in the chat box, everyone. It's going to be set up in Nevada. When you live in the state that you're conducting business in, you're going to set up that entity 9 times out of 10 in the state that you are conducting business in. So you're not considered a foreign entity to that state, but you can have a parent company in Wyoming. Now, they also do real estate development. They had a development LLC. This development LLC is owned 100% by the S corporation. Guys, we talked about this yesterday. Having an S corporation is amazing because it's one step above the LLC in the sense of audit risk if you have a single member LLC, but it's also amazing because it helps you eliminate self-employment taxes, which we are going to talk about here in a moment. But what we did talk about yesterday was the purpose of having a family management company. Part of the reason why I like establishing family management companies is because the IRS allows for us to pay minor kids without having to pay into Social Security tax, which is FICA, up to $15,000 a year, with our children being able to take a tax deduction. How many of you that are sitting here right now have children? Put child inside of the chat box if you have children that are underneath the age of 18. Underneath the age of 18. We'll talk about what we can do if they're over the age of 18 on Friday. But if you have children that are underneath the age of 18, put child inside of the chat box. Okay. Now, they also were deciding on whether or not they wanted to buy real estate. They were deciding on whether or not they wanted to buy real estate in North Carolina, whether or not they wanted to buy real estate in Florida. And so they wanted to see what would it look like for them to have a structure for their rental properties before they buy real estate. How many of you guys map out your LLC structures before you decide to buy real estate? Put a yes in the chat box if you do. Put a no in the chat box if you don't. Put I am willing if you are willing to do it with me this year. How many of you guys map out your LLC structures before you buy real estate? Put yes if you do. Put no if you don't. Put I am willing if you're willing to do this before you buy real estate. Okay, great. So what we're going to do is we're going to make sure we map out our LLC structures before we buy real estate, because I like to have a plan for saving money on taxes. I don't like to just wing it. I like to have a plan for having anonymity. I don't like to just wing it. I like having a plan for asset protection. I don't want to just wing it. Now, how many of you guys would love to have your Wyoming company, your parent company, owned 100% by your trust? Put a yes in the chat box if you think that makes sense. Put no in the chat box if you think that doesn't make sense. See a lot of yeses here. Okay. You want your LLC, you want that parent LLC owned by your trust? Yes in the chat box if you do, no in the chat box if you don't. This is a trick question. Are you guys loving this? Give me some fire emojis. Give me some flame emojis inside of the chat box if you're loving being on here with me right now. Are you loving this? Because I know you're struggling with this answer right now. Do you want your parent Wyoming Cope LLC to be owned by your trust? Yes? No? I'll wait. Has everyone answered? Okay. Now, my next question to you guys, and I'm gonna help you answer this question. My next question to you is: does a revocable living trust, does that give you asset protection? Put yes in the chat box if it does. Put no in the chat box if it doesn't. Does a revocable living trust give you asset protection? Put yes in the chat box if it does. Put no in the chat box if it doesn't. Okay. It doesn't. Thank you so much. Glad Lee got that. Delonte, Kabia, Rodney. A revocable living trust does not give you asset protection, guys. It's not an asset protection vehicle. A LLC is an asset protection vehicle. A trust is just an estate planning vehicle. It's a formal entity that you can use to pass off assets to your beneficiaries. It does not give you asset protection. So if I have my parent Wyoming LLC owned by my revocable living trust, I now say I no longer want asset protection. Does this make sense? Now, I will preface, I'm not an attorney. You will need to speak with your own attorney. This is my own event, though. This is my tax-free wealth event. So I am allowed to talk on here, okay? But I have to preface this that I'm not an attorney, and you will need to speak with your own attorneys. And this is for educational purposes only. That being said, I want you to see this here. What I want is for all of you guys to amend your operating agreement of your parent Wyoming company so that the membership interest, you being the member, by the way, of that Wyoming company, is allocated to the trust upon death. If you die, I want your LLC to immediately go into your trust, because now your trust is irrevocable. Now your children are going to receive your trust, and guess what you're going to want them to have? You're going to want them to have those rental properties that you decided to buy in Indiana or North Carolina. You're going to want to make sure that those assets get directly over to them. All right, let me know if I'm back. All right, beautiful. All right, let me know if you guys can see me. All right, we're back. We're back. We're back. Don't worry, guys. Don't worry. Technical difficulties all can be a tax-free wealth challenge if there wasn't a little bit of difficulty for us to overcome. Now, what we were talking about here was whether or not you guys wanted your assets to be transferred over to your beneficiaries. And in order for that to happen, we need to make sure that everything is allocated to living trust. But what you would think is that you would want everything to be owned by that revocable living trust, right? False. If we have everything owned by a revocable living trust, what we're doing is we're sacrificing our liability protection, that which we don't want to do. What would be the purpose of setting up all of these LLCs if all we did was allocate them over to our to sacrifice our asset protection? We would immediately lose the benefits of the charging order protection that is provided at the Wyoming level. Now, I want you guys to write this down before we move on because I'm not sure where I froze at on the screen. But what it states here is that parent Wyoming COPE membership interest shall be allocated to the trust upon death stipulated in the operating agreement. So LLC that you create has an operating agreement. It dictates how your LLC is going to operate year in and year out. And inside of that operating agreement, you can write exactly what you want to have happen upon your death as a member of that operational LLC. Instead of having that LLC owned 100% by your revocable living trust, sacrificing your liability protection, you can amend your operating agreement to include your membership interest allocated over to your trust upon death. Now, guys, I don't know about you, but that's exactly what I wanted when I was setting up these LLCs. I wanted for my family to be able to benefit from these properties in the event that something happened to me. I wanted so my daughter would be able to inherit the business and these properties in the event that something happened to me and my wife. And I wanted to make sure that while I'm living, that I have the liability protection, not only from the inside, but from the outside as well. Now, how many guys have an LLC and you're confused on whether or not you should be switching your LLC to an S corporation? Put yes in the chat box if you are. Put no in the chat box if you aren't. If you have an S corporation, put S corporation in the chat box. Beautiful. What I did was I created a diagram here to share with you the crossover point of when an LLC should be converted into an S corporation. Oh, of course. Let me get that fixed here for a second. All right. There we go. So let's start with the left side. If I'm an LLC owner and I have $50,000 in net profit as an LLC owner, haven't switched over to an S corporation yet, here's what you have to understand. There are 3 taxes that you're going to pay as an LLC owner. You're going to pay federal taxes, which we're all comfortable with. That just goes to Uncle Sam. We have state taxes if we're in a state that taxes us. And then we have Social Security taxes, which makes up 15.3%. Now, as an LLC owner, you're filing a Schedule C. LLC owners do not take payroll. You only take distributions from your corporation or from your entity. You do not take payroll as an LLC owner. So the math breaks down like this on $50,000. You'll pay $2,656 in federal taxes on 50 grand. If you're living in a state that has state taxes, you'll pay, let's just say, a state that has no state income taxes. And then our self-employment tax, which is the 15.3% that makes up Social Security and Medicare tax, is $7,650. So your total taxes really on 50K is $10,306. Your take-home income is $39,694. Somebody that is making $50,000 self-employed is taking home $39,694 after Uncle Sam has come in and has taken his fair share. Now, let's talk about this exact same scenario off of 50K net profit, but us being an S corporation. Let's see here. Now, if we decide to be an S corporation, there's a form that we're going to have to fill out called a 2553 form. This form is the form that goes to the IRS that we no longer wish to be taxed as an LLC. We only wish to be taxed as an S corporation, which means that once we are transitioned to an S corp, we have to operate as an S corporation. We no longer just get to take money out of our bank account only. We also have to process a W-2 paycheck to ourselves. And the IRS is going to want to make sure that we're taking a reasonable compensation from our S corporation, which is roughly around 30% profits. Let's say that we issue a W-2 salary to ourselves in the amount of $15,000, roughly about 30% of $50,000. If we were to issue $15,000 in the form of a salary to ourselves, it becomes a tax deduction for the business. We're going to still pay self-employment taxes on that 15K, but instead of paying self-employment taxes on the 15K, it's considered payroll taxes. And payroll taxes is a lot better than paying self taxes. And here's the reason why. In the first scenario, I paid 15.3% on the entire $50,000 of business income. But in this scenario here, as an S corporation owner, I'm only paying 15.3% on the salaried portion that I paid myself, which is the $15,000. So I'm going to process a payroll, which is a Form 540, a payroll tax return, and then I get to take tax or take distributions on the other $35,000 that I did not pay myself in the form of a salary. Because I'm an LLC owner taxed as an S corporation, I could take out the $35,000 and live on it if I want to, whenever I want to throughout the year. But I'm still going to pay federal and state taxes on that. So let's do the math. If we were to do the math on the S corporation, we're still going to have this in federal taxes, $2,656. Your state taxes are only applicable if you're in a state that has taxes, but your self-employment taxes, which is now payroll taxes, it has dropped to $2,295. On a $50,000 profit from your business, your take home is now $45,049, whereas your total taxes is $4,900. In both scenarios, the $50,000 is taxed. But what you'll notice with the S corporation is you have to take a payroll, you have to take a salary. And when you take that salary, you're only subject to self-employment taxes or payroll taxes, 15.3%, on the amount of money you gave yourself in a salary. Now, on the LLC side, you're subject to payroll or self-employment taxes on the entire $50,000. This is why the crossover point is right at 50,000 to switch from an LLC to an S corp when you have an active business. This is the net difference. Now, some of you guys are going to say, Karlton, well, I'm making $150,000 as an LLC. So you can imagine how much money you're overpaying in taxes by remaining as LLC, right? This is part of the reason why we love educating taxpayers on the S corporation strategy on YouTube, because self-employment taxes is the silent killer as you're building your businesses. How many of you guys have switched over to an S corporation before in the past? Put a yes in the chat box if you have. Put no in the chat box if you haven't, and if you need to. All right. We're going to jump right in. I'm super excited to be able to teach you guys some of the advanced home office tax strategies that I've learned over the years. But before we get into the advanced home office tax strategies, I first want to teach you how to read IRS publications. Every single year, the IRS puts out these publications. Oh, let me fix my scene here. Every single year, the IRS puts out these publications. And what the publication is letting taxpayers know how they can go about qualifying for tax write-offs. So the publication that I'm going to share with you guys here today is a publication that the IRS released in 2024 on business use of your home. Now, I want to be able to share with you a very important piece of the home office deduction. Here inside of the home office deduction, the IRS has the exclusive use and the regular use test. So I want to read through this with you. To qualify for a home office deduction under the exclusive use test, you must use a specific area of your home only for trade or business. The area for business can be a room or separately identifiable space, but the space does not need to be marked off by a permanent partition. You do not need to meet the requirement of the exclusive use test if you use the area in question both for business and for personal use. Now, they also have this regular use. To qualify under the regular use test, you must use a specific area of your home or business on a regular basis. In Incidental or occasional business use is not regular use. You must consider all facts and circumstances in determining whether your use is on a regular basis. So it's a little bit unclear sometimes with taxpayers on what regular use is or what exclusive use is, because a lot of taxpayers who are taking the home office deduction sometimes are utilizing just a space in their home for a home office deduction. How many of you guys have a space in your home that you're currently using for a home office deduction? Put a yes in the chat box if you are. Some of us have a whole entire room dedicated for home office, but some of us just have a space. But what happens when you're like taking a phone call from your aunt or from your uncle? Now it's a personal phone call, right? What happens if you decide to surf the web? Now you're doing something personal, right? So it's like, how does the IRS really know whether or not something is personal or business use all of the time, right? And by the way, do you think IRS likes to audit business use of home? Or do you think some taxpayers might abuse the home office deduction? Put a yes in the chat box if you think they do. Put no in the chat box if you think they don't. So, because of this, what the IRS has done is they've created two methods for the home office deduction. They've created the simplified method and they've created the regular method. Now, the simplified method is where you get to take $5 per square feet up to 300 square feet in total. Okay. So how much would that mean in a tax deduction, everybody? $5 per square feet up to a maximum of $300 per square feet. How much would that lead in a tax deduction? $1,500. Okay. So this is the simplified method of taking the home office deduction. IRS says that if you don't want to do any type of formal calculations for us, you could take the simplified method. Just take $5 up to 300 square feet, and you can max out at $1,500, and that's all you get to write off for the year. How many of you guys would love a $1,500 deduction? Put yes in the chat box. Put no if you need more. How many of you guys would love a $1,500 tax deduction? Put yes in the chat box. Put no in the chat box if you need more. Okay. So when you go through, when you go through TurboTax or you go through any of these tax softwares, what you'll immediately be ran into if you're self-employed is the simplified method. It will pop up and it will ask you if you want to go through the process of going through the simplified method. But if you're somebody that has the time, you might want to take the regular method instead. And what the regular method instead will allow for you to do is it allow for you to take the square footage of your home and you get to divide it by the square footage of your office space. Okay. So if I have an office space, I get to take a percentage of the amount of office space that I'm renting out relative to the total space of my entire house. Maybe I'll make my entire house 100 by 10 and I'll make this 2 by 5. Make it probably a little bit easier. Now, if I'm taking a home office deduction based on the square footage of my space relative to the square footage of the entire house, I'm taking a percentage now. Let's just say that my home office is 10%. Now I'm able to take 10% of my utilities. I can take 10% of my water. I could take 10% of my electricity. I could take 10% of my rent payments. I could take 10% of my expenses that I have associated with the house, could be HOA fees. So I get to take 10% of my total expense of the house. But how many of you guys feel like when you take these home office deductions that they kind of lead to only a little bit in tax write-offs? The average home office deduction that I see on the tax returns only leads to about $5,000, maybe $6,000 a year. How many of you guys need $5,000 or $6,000 in tax deductions? How many of you guys would just need only 5K? That'll be enough. Or 6K. That'll be enough. Right? And the worst part is, guys, when you guys are sending me photos of the homes that you guys have and these rooms that you guys have, I, I don't know whether or not they even qualify as home office spaces. Here are some of the photos that we've gotten over the years of me being a tax professional. Here's a room that a customer sent me from his desk. He said, behind me though is my daughter's crib and changing station. I said, so you're taking a home office deduction you're in the same area that your daughter goes to sleep at night. He said, yeah, but she sleeps over there and I'm in the corner. This is another room that one of my clients sent me. It's like a bed connected to like a desk. He said, does this count as a home office if I take just that corner space? So I started to be conflicted around whether or not I even wanted to take home office deductions for my clients, because I felt like a majority of my clients don't really know how a home office deduction really works and whether or not it's something that I would want them to take on a tax return, knowing that the IRS likes to audit the home office deduction. But guys, when I was asking other CPAs about this strategy, the home office deduction, they told me, there's other ways in which your clients can take the home office deduction. And so I started asking around in the CPA space, what are other ways in which we can take home office deductions for taxpayers? And instead of having to do the simplified or the regular method, there's more advanced methods for us to take the home office deduction. I'll explain an example for you guys. When my mother started her tax and accounting company, she started it in her living room, believe it or not. So she was raising my brother Kenny, and she hired her first personal assistant to help her out, and then she eventually wanted to go get an office space. But she was using her home first to run her business. After she decided to go get an office space, well, first off, in the process of her getting an office space, what did she have to do? She had to probably go online and figure out what she can afford. She probably had to call around and pull comparable rates to determine how much can she really or how much can she really afford for an office space. And once she was able to determine how much she could afford from an office space, she went into a formal leasing agreement. Am I right? Now, what is the difference between my mother renting from another third party, a formal office and a commercial building, versus her renting from herself? What's the difference, guys? Anybody? What's the difference from her going and renting from a third party with a formal leasing agreement versus her having a leasing agreement to rent her own house if she wanted to? What would be the difference? No difference, right? The difference is that she is choosing to do a formal leasing agreement with a third party business that she doesn't know versus doing a formal leasing agreement with her own business. Now, what the IRS will allow for us to do as taxpayers is create formal leasing agreements as long as we have comparable rates. So what I've done as a tax strategist is I have pulled comparable rates for my clients who live here in Southern California or where they live in Florida or where they live in Arizona. So I can determine what does it cost for you to rent out a one bedroom from a place here in Irvine, California. And I can pull comparable rates from Airbnb. I can pull comparable rates from Zillow, and I can formalize a leasing agreement. Put lease inside of the chat box. Now, here's what I want you guys to understand. $1,200 for a one bedroom in Irvine is a lot better than taking a $500 home office deduction per month and only getting a couple, maybe getting $6,000 in a write-off a year. So for my clients, what they're looking for is how can they maximize being the fact that they're a homeowner? How can they take more than just a home office deduction, more than just a simplified method? And the IRS allows for you to create a leasing agreement between yourself and your company if you have a business. Now, this leasing agreement can be for 14 days, which is the Augusta rule, or you can extend past the 14 days if you would like to. For those of you that are watching with me right now, what I will be sharing with you guys is a leasing agreement that I have created for you guys. So you will learn how to lease equipment or how to lease your office space to your corporation. And I have pulled rates based off of where my customers live off of Zillow and PureSpace, because you know what the IRS wants to see? The IRS wants to see that you have comparable rates. How did you come up with the amount of money that you are charging to bill on a monthly or a daily rate? They want to know the daily rate, the hourly rate, the overnight rate. Then, you know what they're also going to want to see? They're going to want to see that you logged it, that you created your rental agreement, that you've logged your meeting minutes if you're an S corporation. And by the way, did you write the check? Did you actually pay yourself back from your own business? And of course, the rental agreement that you're going to need, as well as the meeting minutes for you hosting the events at your house. How many of you guys would appreciate having something like this? Or better yet, how many of you guys would appreciate having my team just build this out for you? How many of you guys are like, dude, I don't even want to do it myself? What if I just had somebody look up my address, figure out where I live, figure out how much it would cost for me to rent out my house to my corporation, pull the rental rates for me, come up with the daily rate, the overnight rate, draft the rental agreement for me, Karlton? How many of you guys would appreciate that? Put work inside of the chat box if you want to do the work, or put work inside the chat box if you'd rather have us do the work for you. Put work inside of the chat box if you'd rather have us do the work for you. Now, what if we have a vehicle? We're going to talk about vehicle write-offs here now. What if we have a vehicle that we're trying to write off? How does the IRS allow for us to deduct vehicles on our tax returns? How does the IRS allow for us to deduct vehicles on our tax returns? Guys, there's two different ways. How does the IRS allow for us to deduct vehicles? You could take the actual method, or you can take what? The mileage. Thank you. Okay. Now, when I was studying for the IRS exam years ago, the IRS allowed for you to take, I think, like 51 cents per mile. It adjusts every single year for inflation. I would assume probably now, I would assume it's probably 70 cents per mile. Wow. You guys named it 70 cents per mile now. But I don't know about you guys. I work from home a lot of the time now. I'm not driving all the time. So how many of you guys would say, Karlton, I don't know if I'm taking the mileage because I don't see my a whole lot. I'm not driving to and from all the time. I'm not meeting with clients. Some of you are concierge doctors and nurses and physicians and consultants, so I know you're driving. But for most of my taxpayers, are you guys driving a lot? Put yes in the chat box if you're driving a lot. Put no if you're not really booking a lot of miles on your car. Okay. So for most of us, the actual method is probably more applicable. Now, the actual method is what you probably think it is. You get to write off everything you actually spend your money on. Okay. So car payment, insurance, gas, if you are paying for electricity because you have a Tesla, everything that you spend your actual money on. Now, the issue with the vehicle deduction is the IRS states that you can only vehicle if you're using the vehicle more than 50% of the time. Okay. So the vehicle has to be used more than 50% of the time. Karlton, how is the IRS really going to know brother, if you want, you can track your miles with a Mile IQ, or QuickBooks has a mile tracker. You could do it that way, or you can create a travel log, which is what I do. So I already have a travel log for all 365 days out of the year. It states Monday through Friday, my cars are business use. Saturday and Sunday, my cars are personal use. I don't like to play around with it, right? I make it very easy on myself. But that being said, the vehicle has to be used inside a business for more than 50% of the time. Now, without even talking about whether or not this car weighs over 6,000 pounds or not, does the IRS allow for you to take depreciation on a vehicle that you own? Not a vehicle that you lease, a vehicle that you own. They do. Okay. So you're allowed to take depreciation on a car that you own. Let's say that this car, right, $8,000 vehicle. What is the allotted amount of time that I'm allowed to take a vehicle over? Oh, I just told you. It's over 5 years, right? So you're allowed to write off a vehicle over the course of 5 years. Now, if I take normal straight line depreciation means equal amount over the course of time. I want you to write that down. Straight line depreciation. If I take straight line depreciation, I'm going to write off $10,000 in my first year, $10,000 in my second year, $10,000 in my third year, $10,000 in my fourth year, and in the fifth year, I'm recouping the rest of the $10,000 with straight line depreciation if the vehicle is used 100% for business use. If it's 50%, 5,000, 5,000, 5,000, 5,000, that makes sense so far. Put yes in the chat box if it makes sense. Put no if it doesn't make sense. Now, what if I wanted to maximize the amount of depreciation that I take? Even this car is not over 6. Is there a way for me to take more depreciation in the first year? Put yes in the chat box if there is, but no in the chat box if there isn't. Is there a way in which I can take more depreciation on this car in its first year, even though it doesn't weigh over 6,000 pounds? You guys are saying bonus depreciation, but isn't bonus depreciation for vehicles that, hmm, what am I allowed to do here? Section 179. What I'm allowed to do is called double declining depreciation. Now you're learning some real tax topics here. I told you we were going to go advanced today. Double declining method. I know you guys are like, what? Karlton, I haven't seen that on any of your YouTube videos. It's not on YouTube. Talking about depreciation, this in depth can get a little bit boring on YouTube and get a little dry. That being said, what does double declining method mean? Double declining method means I could take 200% in the first year, 200% in the first. That means I'm rolling $10,000 that I would have taken in year two into year one. My year one write-off is now 20,000. Put yes in the chat box if you're following me. Put no in the chat box if you're not following me. What I've essentially done is I've scooted up the amount of depreciation that I was going to take, even though my vehicle doesn't weigh over 6,000 pounds. Pretty cool, right? So what does this mean? This means that we have strategies that you can leverage without having to always buy vehicles that weigh over 6,000 pounds if you know how to leverage the tax code. This is not something that you just all of a sudden do when you're filing tax returns. This is a decision that's made throughout the year before you go into tax. All right, but what if I wanted to purchase a vehicle that weighs over 6,000 pounds? Maybe this car does weigh over 6,000 pounds. What do I have at my disposal? Tax codes. IRC 179 plus IRC 168K. Pretty sure. Now, bonus depreciation comes from IRC 168. Section 179 allows for you to write off equipment that you're utilizing in your business that has useful life of less than 20 years and take a maximum really of $26,000. 168 allows for you to claim bonus depreciation. Bonus depreciation means that if I have a vehicle that weighs over 6,000 pounds, I can take 100% of that vehicle's purchase price in year one. Right now, bonus depreciation, not 100%, it's at 40%. But Trump said, I want to bring it back to 100% as soon as I possibly can. This is what we're waiting for. What does that mean for you? Well, what that means is if you have a business on your tax returns this year and you buy a vehicle that weighs over 6,000 pounds, such as a G-Wagon or an Escalade or a Ford Expedition or a Toyota Raptor or a Tesla Model X, you claim 100% bonus depreciation and put down a down payment, even though you finance the vehicle. But what happens if you already have a car that's paid off? What happens if you have a vehicle that you've already took bonus depreciation on? What can you do now? Well, what I could do is I could go on Turo and figure out how much does it cost for me to create a leasing agreement to lease my car to my business. Maybe I have an Audi A3 that I purchased back in 2015. And the average rental rate to rent a car like an Audi is $75 a day. So I do 75 times 30 days. That's $2,250 a month. I multiply that by 12. I'm looking at a $27,000 deduction on an Audi A3 2015. So I'm going to use a leasing agreement. And I'm going to lease that vehicle back to my business. Put yes in the chat box if you're following. Put no in the chat box if I have completely lost you and this is over your head right now. I know the first time that I was teaching this, I lost a lot of people on the first time that I was teaching this. How many of you guys are like, oh my goodness? Here's what I want you to understand. You could take basic write-offs and be completely fine taking basic write-offs until your basic write-offs wind you up with a basic IRS audit, because the IRS loves to audit the home office deduction. But you know what I love about the home office deduction, the way in which I'm teaching you to write the home office deduction? I'm going to show you. On the 1065 form that we talked about yesterday, we talked about how this tax document is audited 33% less than a single member LLC. But what we also talked about is on a 1065, there is no place for you to put a home office deduction. You have a place for rent. Does that say anything about your leasing agreement? Does that what car you've leased? Does it say what house you've leased? Does it say how much you've charged? Even though you've documented everything, of course, because you're going to document everything because I'm going to make sure of it. I'm a stickler on documentation. You have one line item here on your tax returns. Now, taxpayers, I am all about taking advantage of the tax code, but I want to take advantage of the tax code and I want to fly under the radar at the exact same. So if you're with me right now, what we're going to do is we're going to take advantage of agreements and we're going to take advantage of the fact that we're homeowners. We're going to take advantage of the fact that we have vehicles to create more tax deductions. Now, I told VIPs this in our earlier session that I'm switching things up a little bit. Normally, we have real estate tax strategy training on Friday and we do income shifting tomorrow. But how many of you guys would love to switch things up and have real estate be our training income shifting to Friday? How many of you guys already know real estate is going to be a part of your tax planning strategy for 2025? That's amazing. Cool. So here's what I will say before I transition here. We are going to go ahead and jump into real estate training tomorrow. I'm going to teach you guys the short-term rental strategy. I'm going to teach you guys the real estate professional strategy. I'm going to teach you grouping elections, how to read cost segregation studies. We're going to look inside of tax returns. But before we jump off, you have homework is to locate the city, the state, and location that you would like to have your first investment property. Even though you don't know yet how you're going to do it, when you're going to do it, I want you to have the location of where you want to do it written down for tomorrow. Now, I shared with VIPs earlier that there's the possibility of us opening up our private client group tomorrow. You guys have messaged me privately, and I got your messages inside of the community. Karlton, how asked what we've learned here in the event to start working on some of this with you and your team? And I'm listening to you guys. If you guys are interested in joining our private client, what we're going to do is we're going to share an application with you guys here tonight. This application will invite you to a Zoom room that I'll be hosting tomorrow night after guys a little bit more about the private client group. But what I'll do right now is I'll bring up some of our members who have been a part of Tax Alchemy, their experience with you. We have Kat. Kat, are you here? I see that you're in the you up to share with everybody that's here on the challenge what it was like going through the tax-free wealth challenge for you, because I know you were once in their seat. And what is it like being a part of the Tax Alchemy community? What is it like being a part of the private client group for all of these members here that are a part of this event?
Thank you, Karlton, for the opportunity. So I'm Kat from Maryland. I joined the tax-free challenge October 18th. I think that was the exact date, because I just handed off a big check October 14th to the IRS. And so I vowed never to write a check again. So when I joined the challenge, I was really like, I went all in. I was determined that, I'm not going to pay this year. So basically, I paired with Christine, is amazing. And she really helped me map out my tax plan. And although I only had 2 months, November and December for last year, to implement a lot of the strategies, I was able to implement, I think, like maybe 8 or 7 of them. So I'm really excited to see, to see the result of all those.
And Kat, if you don't maybe share what were your tax savings like, but from your tax.
Well, I don't know what my tax bill's gonna be at because we haven't done it. I'm waiting for, I filed for extension. However, it's gosh, okay. So I just for context, my husband is a surgeon W2, and I'm a registered nurse, both making. So with that being said, our tax bills always probably 500,000 and up every year. And so it's a lot, right? And so I needed a lot of the strategies that you shared. And so that the challenge really got me excited because I didn't know all these things are available to us. So yeah.
And Kat, I just wanted to say thank you too for, trusting us, because when it came to you onboarding, it was kind of towards the end of last year, right? Whereas many of these individuals have the opportunity to get started on their tax planning right now and having the opportunity to learn more about the strategies that they're going to be setting up with our team. Thank you so much for your experience and look forward to seeing you back inside the Slack channel.
Thank you, Karlton. And I just want to say one thing. I really appreciate the customer service within the Tax Alchemy, because just say, for example, the event that was amazing in Miami, you didn't have to serve us black caviar, but you did.
Yeah.
So that just means that you like all your clients. And so I'm very happy.
Absolutely. I appreciate that, Kat. Yeah, guys, we just had a live event for our private client members. We host live events twice a year, actually, and we bring all of our private clients to a 2-day event where we curate a bunch of speakers going over different investment strategies, tax strategies, you name it. And I serve a little bit of caviar at the event. So if you guys are the type to try new things, you guys will definitely love our Chris Bush here as well. Chris has been a member with us for almost Chris, if you don't mind, share with everybody your experience being inside of the tax alchemy community. There's a lot of people that are on here right now that are just learning about all these tax strategies for the first time. Oh, we'll get you to unmute.
All right, can you hear me now?
There you are. Yeah, I got you, Chris.
Good deal, good deal. It's a pleasure to see you again, my friend.
See you as well.
Yes, sir. So yeah, so just I guess background. So I'm a financial advisor, been doing it for about 17 years now, so for me, being in tax alchemy is a big deal because as an advisor, I run a firm, have employees, make a decent income from the business. Um, we still have issues that we got to have work with a great tax professional, right? I worked with a tax professional as my income jumped from about, I guess, 2015 until 2020. It was always being proactive, right? To them say, hey, what about this strategy? Hey, what about that strategy? I'm like, well, dang it, I'm the financial advisor. You're the CPA and supposed to be the EA. Why am I always the one giving you the information, right? My old CPA, not you, Karlton, right? Why am I always giving you the ideas of how can I lower my tax bill, right? How can I lower my taxable situation? And like, okay, for me, I want somebody that's working proactively, right? Right? Not, I don't want you to be reactive. I want you saying, "Hey, look, I'm looking at your books. I'm looking at your business. I'm looking at your income. Let's not wait to the end of the year to figure out a tax plan. Let's not wait to December and say, okay, well, we may can do something, but we got to push it to next year because it's too late." And so for me, what I learned from the challenge is that okay, you do have a whole program, a system that's going to walk us through and educate us to say, hey, okay, we can be proactive on your tax plan. Let's put this. Oh, let's look at your books focus on short-term rentals. Let's focus on real estate. Let's focus on, oil and gas financing or like those type things, those strategies that we may not be, you know, exposed to, but now we can, right? So that was my benefit just from joining the program. And I think in 2023 was the first year that I implement some strategies. In 2023, I didn't actually pay any federal income taxes,
Yeah.
right? So I had zero taxes that I paid from the feds. Because part of my business that year was in California, so you got to give something to California, right?
Yeah.
And they're always gonna find a way. But from the federal side, I was not tax season. I think my tax bill may be around maybe 10,000 at the most, and that's only because it was my fault, right? I did like an investment in like in September of last year, like I bought a golf course, and that was like not part of the tax that money. But it's no, you know what I'm saying? But it's, I owe a little bit just because I didn't complete one of the last little rings on my tax plan that you guys recommended. But all in all, it's just the education that you guys have. Like Kate said earlier, it's really the customer service, right? Anytime on a Slack channel, I have a question. It's gonna get answered pretty much within 24 to 48 hours, but it will be a detailed question, right? It may not be you, Carlton, but that's what I love. You probably have like 15 people Slack channel that look, somebody's going to see my question and it's going to get answered and it's going to be thorough, right? It's not going to be looked over, it's not going to be glazed over. And see, that's the type of communication that you want from a professional because that's the same way in my business as a financial advisor. I have to run that same thing as well,
Yeah.
right? So if I'm giving my clients that the great customer service, if they have my phone number, they can call, they can text me, right? I feel that exact same relationship with you in Tax Alchemy. So I recommend everybody to kind of be a part of the program. Price, not a big deal because you're going to get that money back, right? From you surround thinking about progression in their business and lowering their taxes. So Carlton, I definitely appreciate you a lot, man. And yeah, I learn something every time I get together.
Yeah, man. You're like a brother to me, bro. I appreciate having you inside of the community. Chris has been with us, guys, going on 2 years, wiped out his entire tax bill in 2023. About 10,000 in federal taxes in 2024. I don't know about you guys, but those are great results. And more importantly, he's excited for what he's doing this year in 2025. He's
Yeah.
connected with like-minded individuals. He's already gone through the process a couple of times, so he knows what he wants to do. And it's really like riding a bicycle. Once you learn how to ride a bicycle, you kind of know what strategies you want to leverage. And so I'm
Yeah.
excited to be able to work with you, Chris. Glad to have you inside of the community. Thank you for
Yes, sir.
coming up.
Appreciate you. Yes, sir.
We got two other members, guys, here. I just wanted members that are a client group because these members chose to join right after they came to a live event like this that you guys are a part of. Sean is here right now. Sean, I want to bring you up because I know you were a part of this event as well. Maybe you can talk about your experience being a part of the Tax Alchemy group, the type of savings maybe you're receiving, and what's got you excited about some of these members joining possibly tomorrow.
Absolutely, Karlton. Yeah, happy to be here. So again, I went through this same challenge. I was back, I think, in the year, and I didn't even get all the way through. I think it was like Tuesday, Wednesday. I was the one reaching out, like, "Hey, man, where do I sign up? How do I get into this?" So was at the live event most recently, and the team that you've assembled is just top notch. Again, like I said before to you, and I'll repeat it now, like it just feels like everybody's kind of met before. Like it's just such a group of like-minded folks that are all trying to do everything we can to keep the hard-earned money that we work. I kind of view taxes. This has really just completely changed my right, and it's effectively taxes are a choice, right? You can either implement strategies to help use the money that you earn and invest it in yourself and a business, implementing different strategies to keep as much of that money to yourself as you can, as opposed to just giving it away to the government and letting them do whatever they wish with it. So, I mean, it's life changing in so many different ways to think of things differently. As far as the actual strategies I'm implementing, there's a handful, right? I've set up some LLCs. I already had a property, so I was in a unique circumstance. I due to not filing correctly in 22 and 23, we're actually going to go back and revise my tax returns for those years. So
Yep.
you have 3 years to do that, folks. If you've got any big misses, we're implementing a game changer to be able to leverage that, not only on a go forward basis for 2024 when I signed up, but being able to go back and correct prior mistakes is just huge. There's significant money on the table for me to I'm eager to recoup hopefully this calendar year. So yeah, it's again, I told you then when I joined that, hey man, I can't wait to be a next testimonial whenever I can ever again, man. I think it's an incredible group that you stood up, and appreciate all of your ability to meet with us and to go through us and to really understand you and your team, understanding that each one of our tax situations is unique, and yet you guys are able to put together a game plan and a strategy to help us execute on that and really grow that. The platform for generational wealth is alive and well in all of your.
Thank you, man.
Can't thank you enough.
I thank you. Thank you, Sean. When you to challenge, he was messaging us like day 2 get in. And you know what he told my team? He's like, let Karlton know that I will be one of those testimonials one day that comes on to the Tax 12 Challenge. Fast forward 8 months later, here we are. So I just want to say that's a testimony to you taking action with the strategies that we leveraged, right? But here's what I want. Proud of the fact that, it wasn't really about just the strategies he was leveraging that year. A big part of why he's happy is we figured out strategies that he didn't incorporate on previous filed tax returns that we can amend those tax returns and get him money coming back to him in the form of a refund here in 2025 when we resubmit those tax returns. So if you guys have tax returns going back over the course of 3 years, I did ask you to go and get those returns. I did that for a reason, because when you're with us, we're going to do is we're going to look at those prior returns to see what missed opportunities that you guys didn't leverage. Thank you so much, Sean, for coming up. Sean, before I let you go, can we bring Sean back up really quick? Before I let you go, Sean, for somebody that might be making the decision tomorrow to join the private client group, what's one thing that you should tell them before they join?
I mean, the biggest thing for me was the ability to get the returns in front of your group, let them sort of put that together, that assessment, that determination that it is worth the while, right? I think that was the biggest benefit for me is knowing that effectively assess and make sure it's going to be worth the while in order to proceed. And again, it's been life changing for me. And I know there's many people in the group that make far more money than I do, but with any luck and implementing the strategies, I mean, sky's the limit, right? That's how you keep that money that you're earning. And yeah, it's been life changing. Obviously, the event that we just had, so many different great speakers going to have a pretty big year this year with money coming back, going back not only 24 but 23 and 22. So I would say lose at least work with the group here to see what they can do and what they decision from there.
I appreciate you coming on, Sean, and being just transparent. I love that. And brother, it was so great meeting you for the first time in person and being able to, chat with you over this couple of days out in Miami while we were connecting during the live event. I'm excited for the fact that you already jumped into some of the opportunities for 2025 when it comes to your trucks. I briefly talked about the truck leasing thing today. I didn't go into the strategy, but I kind of mentioned it earlier. So I'm excited for all these members to kind of learn a little bit more about some of the strategies you're already taking advantage of.
Excellent. Yeah. I'm again looking forward to it. Already implementing things this year and hoping to get returns back from 24 and prior years as soon as we can. So I'm ready to go. So again, it's awesome to call full circle on testimonial and happy to do it whenever I can. It's an incredible group to be in, folks.
Thank you, Sean. Appreciate you.
Appreciate
Nico
it.
Molino, my man. Welcome onto the stage. Nico, you've been here since 2021, 2022, maybe.
Yeah.
Probably one of our first 100 clients for sure, to onboard into Tax Alchemy. So you have nothing but experience to tell people. You could tell people about how our company has changed over the years, what things that you've experienced, but more importantly, Nico, why did you decide to join Tax Alchemy? What was going on in your life at the time? And what were some of the things that you've benefited from?
Yeah. I mean, forget 2021. We've been playing football together since 2012. So I've seen you go from, big swole football guy to scout influencer to complete tax guru. And man, I commend your growth and knowledge, and I appreciate you sharing it all with me. So, first of all, hats off to you, man. What a journey it's been for the last 15 years we've been rocking together. But
Yeah.
since 2021, on this tax side, yeah, we were in an interesting spot where I had been following your content for a little while, and it kind of worked out good timing where I was in the software world selling software, selling technology to all those super fast growing tech companies in the Bay Area, the Ubers and the Postmates and the Coinbases of the world, and was selling a corporate financial planning software. So we modeled out all the financials for these big companies and fast growing companies and had a big year, and the company got acquired. So I
Yep.
was holding a lot of stock. I was in early, and I ended up getting a nice little payout, which was great until I got with you and you showed me what tax bill was coming, and I was like, the year before I had paid a pretty big tax bill because I had a good year, and
Yeah.
this was like 3 times as big as that one, and I just called you like, man, we got to do something. Like, there's no way I'm paying this bill. We got to figure something else out. And you put a couple strategies in front of me, and the
I said
main
there's
one,
always something we can do.
always something. Like, Nico, calm down. You're gonna be okay. There's always something to do. So you showed me the short-term rental strategy. I was doing flips in Austin, Texas before
Yep.
that, and you were
Yep.
like, let me show you the difference between short-term rentals and long-term rentals and development deals and how they're all taxed differently, and your participation is different. And so
Yep.
you kind of pulled me up on the short-term rental strategy. Anyways, we went off, bought a short-term rental, $1 million plus property out in Dallas, Texas,
Yep.
that did a few things for us. One, you helped me write off every single dollar of that tax bill that was coming my way. We turned that property into one that was featured on a 3-time Emmy award-winning HGTV show. And we turned a single property into a business where we take your tax strategies, obviously working with you and the team, and turning that into how do we help other investors execute these short-term rentals by finding them properties, designing them, and setting them up and managing them. So not only did you help me figure out how to write off some taxes, you helped me figure out how do I take this stepping stool. I love the W-2 world, first of all. You helped me figure out how do I take that and build it into something bigger, which ultimately walked away from the 9 to 5, started my own company with my brother, got him out of the 9 to 5 as well. And now we lean on Karlton every chance we get to try to go, help out more people than just ourselves.
That's right. That's right, man. And you guys have been crushing it. How many properties are you guys up to now, or Airbnbs that you guys are up to now?
Between the partners and myself, we've done over 200 in the last 3 years.
Yeah. So it's
We
it's
we got
all
a
started.
handful of
It
them.
all started with one. It all
Started
started with
with
one.
one, and it started with the tax strategy. I
Yep.
was in the real estate world, man, but you opened my eyes to just a different world. Like there's a million ways to make money, but there's only a certain amount that really resonate with you or that you're interested in when it comes to keeping that money.
Yeah.
And so you were the reason that opened my eyes to like, okay, you can do development deals, you can do long-term rentals, you can buy some other land and sit on it and it'll appreciate, you'll make some money. But if you want to write off taxes and you're working in the W-2 world, this is the strategy you need that you can implement right now. And that was the catalyst that turned this into something much bigger.
Yeah. Yeah. We ended up, I remember the day you called me when you got your refund. I'll never forget that. You're like, Carlton, Carlton, the refund came in. The refund came in. And you're like, who do we need to talk to? I want to go on the
Yeah,
news. I want to go on
yeah.
YouTube. You let me know where you want me to be.
Well, it's funny because it's like you hear all this stuff on Instagram or you see like all these rich people that don't pay any taxes and you're like, the news will tell you that people are tax evasion and fraud and all these other things and then you realize that until social media especially like just the access to information wasn't quite there.
Yeah.
And so the rich people just play this game a little differently. Like they just have the right people in their corner. And so when you learn what's actually out there, right? Like the tax code incentivizes the private sector to do things that the government can't do efficiently by themselves. Part of it is looked at as a negative. It's taking our money. Sure, totally understand. The other side of the tax code is they try to incentivize us to build houses, to come with oil and gas, electricity, businesses, hire people, create jobs, whatever that looks like. The code is set up to incentivize us to continue stimulating this economy. And so when we get access to that information through your program, and there's other information out there, don't get me wrong, like you guys can find all this stuff on the internet. But having a business partner like Karlton that shows you exactly where it is, and even more importantly, shows you how to implement it and turn it into reality. When I called you, it was because I had seen all this stuff on the internet.
Right.
But when you really see your taxes not only go to zero, but they gave me money back, I was like, dude, this is the craziest thing I've ever seen in my life. We need to tell everybody. You were like, dude, I'm already trying to tell everyone, help me. And yeah,
Most
man, it
people
was it
think
was
you can't
very
offset W-2 income and get all that money coming back to you in the form of a refund. They think it's not true. It's not possible. It is
yeah,
possible. You're the living proof.
yeah,
Yeah,
yeah. It's cool, man. But you've created something very cool, and we've been able to thankfully piggyback off what you've built. We've got our own lane in actually doing the short-term rental investments and working with other investors, but it all comes back to making money and saving money. And
that's right.
we can help people make money. But when it comes to saving, man, you are top of the game right now, my man. So congrats to your success. Congrats to everyone in the group. Like you guys are in the right place, whether you work with Karlton or you find another tax strategist or you implement these things yourself. You guys are doing the right things. It is real. Follow through on the actions you're taking this week, follow through on the information. And it's pretty amazing how much you can accelerate your goals. Like by saving an extra 25, 50, $100,000 in your pocket, it's like you did an extra year of work by just implementing a strategy. Like you do that 2, 3, 4, 5 years in a row, you're 10 years ahead of where you would have been if you didn't do those things. So, use the information, whether you take it and run with it and do it yourself, whether you hire Karlton, whether you reach out to me, whether you reach out to any of these other people that tell you, this stuff's real, like do it. To follow through. This stuff works. And man, it's cool seeing how much information is available to us now. It's just on us to actually make it real.
Yeah. Nico, I appreciate your honesty. I appreciate your transparency of just coming up here and sharing your experience. Um, you got me motivated first off to go back in and do some more trainings with everybody for tomorrow and for Friday. So I just want to say thank you for that. And maybe we'll be opening this up tomorrow, Nico. We'll see. You know, we normally limit this to only about 50 slots. So we're dropping the application link here for everybody here tonight for them to join the Zoom room tomorrow, and we might talk a little bit more about what that looks like for everybody. But before we hop off here tonight, Nico, what would you say to that person that's gonna make that decision tomorrow if they decide to join the private client group? What would you say to them before they make that decision?
What's your plan? Like, what do you want out of this thing? Don't just take the hype and run with it. Like, what do you want to do with this? I would say figure out where are you going? What's your next year look like? Your next 5 years, your next 10 years? Where do you want to end up? And then if it's right for you, where it's like, I'm committing to this thing, I'm going to go make these dreams a reality. Like, you remember those crazy dreams that we had when we were kids? Like,
Yeah.
don't let that die. You know what I mean? When you all talked about all the things you were going to do with your friends, and we were going to travel here together, and we were going to build this company, like, do not be 40 and let that dream die. Like, it's not too late. I promise you. So if you are sitting there trying to figure out this is all cool, figure out that dream, figure out what do I want out of this life? What do I want to accomplish? And then figure out, how do I get there? And if a business partner, I don't look at Karlton as like a service or, just a strategy. I look at it as like, how do I surround myself with the right business partners that are going to help me get to where I'm going? And from the tax side, Karlton's a business partner. So if you're trying to bring on somebody that not only will give you the information, but is like, I want to get connected to Karlton's contacts. I want to get connected to the crypto guy and the oil and gas guy and the real estate guy. Like, use this as something bigger than just, I'm going to write off some taxes and it's cool. No, learn the information, use it for 10 years, whether you hire Karlton for 1 year or 10 years, use it forever. Tap in with his people, tap in with his network, like, get the most out of this thing to go chase that dream that you had when you were young, and just, man, don't let it die. Just keep going for it. If this is reigniting it, use it and get back to it.
Yeah. I love that, Nico. You're absolutely right. You have to use this service because, to be honest, it's not for everybody. This is for people that are really going to take action. To be honest with you guys, I know a lot of you guys say, I'm going to take action. Yeah, I'm going to take action, until you cross through that door and you see what's really on the other side. Are you really ready? Because we have the resources. We have so much here on the other side, but are you going to commit the time? Are you going to allow for these teachers and wealth builders to step into your life and do what they're meant to do, help guide you? Are you ready to be guided? Have you thought through how that's going to look like for you and for your spouse? Those are things that I want for you to take into consideration tonight as we prepare for tomorrow's training. Super happy that we were able to bring on Nico, Kat, Chris, Sean. Thank you guys so much for sharing in your experiences. Tomorrow, what we're going to do is we're going to go into real estate tax strategy training tomorrow. Your homework for tonight is to choose the city, state, and location for your rental property. I was going to show my iPad. It keeps cutting out here. The city, state, and location for your rental property. And I want you guys to make sure that you mark done inside of the community after you have done that, and share one thing that you learned here today that is going to make a difference in your wealth building. Thank you guys so much for joining me here today. I'll see you tomorrow. Bye.
You're saying it's hopeless, that I should hope less. Heaven can help us, well maybe she might. You say it's beyond us, what is beyond us? Let's see and decide. We've been meteoric even before this. Burns half as long when it's twice as bright. So if it's beyond us, then it's beyond us. Let's see and decide. And I will still be here